I'll go just alone. I can't stop scratching my mind. I gotta keep asking why. Stop telling me all the time everything will be fine. I can't stop scratching my mind. I don't know. Can't see through your skin. I'm not your guardian. I can't see through your skin. Can't see through my skin. Everything will be fine.
All right. Hello, everybody. Welcome back. We were off last week, but we are now back in the studio. How you guys feeling today?
Good.
Good. All right.
Selling off.
There's a lot to talk about this week, especially since we weren't here last week.
I know, like everything from Doge to Elon on Saturday Night Live to inflation.
Oh, that's even old news. There's crazier stuff blowing up right now.
Yeah.
Literally
Oil
blowing up,
shortages.
imploding. Yeah. Shortages, inflation, the world's melting. You know, let's just go get an island and do our thing.
I'm calling it the hangover, the stimulus lockup hangover.
Is it a hangover or are people still high on the stimulus?
It's both. The chickens are coming home to roost, and I just wish there had been 3 smart, professional background investors that have a podcast that could have told people about this.
If only somebody knew.
3 months ago, 6 months ago. Wow.
Yeah, growth imploding. Who knew?
Yeah.
You
Who
can't
knew
buy
that
at any
valuations
price.
matter?
Yeah. Hey, rejoice.
All right.
We got to give ourselves a pat on the back.
Yes, I'm going to give you guys the credit for that because I'm just over here in crypto world, talking about meme coins and shit. And you guys are dealing in the quote unquote real economy. So
I don't know, man. Crypto's getting as real as it gets with this inflationary environment, right?
It's wild. It's wild.
If there's any... Oh, there's just so much. My brain is I'm having trouble articulating all the thoughts going through my brain right now. There's so much to be said about crypto, about stocks, about inflation, about markets, but I think you're underselling it because crypto, not only is it actually starting to really enter the mainstream, but it's also maybe one of the best asset classes to be positioned in for longer term inflation.
Yep. I mean, that's what we've been saying for the past year, these little warning signs of inflation coming in and, trillions of dollars being printed and the writing's been on the wall. And now, like you said, the chickens are coming home to roost.
Yeah.
So welcome, guys. I'm your host, Chris Dunn. I'm joined by my 2 lovely guests. We got Nikki, certified financial planner, Travis, former hedge fund manager, came over from the dark side to the good side. And this show is sponsored by YCharts. YCharts is a platform for what? What do you guys use it for?
Pretty much everything.
Pretty much everything. Yeah. We've got a couple of charts we'll pull
Stocks, yeah.
Charting fundamentals, watch list tracking.
up. Yep. It's also sponsored by our wealth building community over at the Skill Incubator, which we'll talk about later.
Absolutely.
Let's go ahead and jump into it, guys. By the way, go ahead and smash the like button. Let's let the YouTube algorithms know that we're here.
And you like us?
Yes. For you guys watching live, thanks for being here. If you're listening to it or watching it later, thanks for doing that as well. We appreciate it. Where do we start?
Okay.
The news of the day.
Inflation.
Yep. I think that's where we have to start.
Yeah,
All right.
everyone's talking about it.
So let's do like an overview. So we've got inflation. We've got basically an implosion in one of the sectors of the crypto market with some really interesting stuff happening right there. I've got a lot of thoughts on the crypto market. Excuse me. I also took a ton of profit today on some 6 to 12 month trades that I had working. Feels good. I was listening to Eminem on my bike ride today. Killer, just like in the zone, feeling good about that. And then, we've got some questions, and we'll also take some live Q&A from you guys. So
Let's do it.
Let's jump into the charts. So taking a look at, let's look at the past 10 years of inflation. And, we've been talking about lumber prices, commodity prices going up, stuff like that. Obviously, the U.S. just printed $5 trillion over the past year or so, thanks to COVID. And inflation report just came out showing it was over 4%. What do we make of this?
It's definitely not a surprise. I don't know why everybody's so surprised about it.
Mm-hmm.
We knew that everyone's been talking about transitory inflation coming due to all of these things, money printing, etc.
Which, by the way, what does transitory inflation mean for anybody that doesn't know?
Temporary.
Like
gonna
just
come
just
and
a
go.
spike and then it's like right back down to normal.
Yeah, essentially, and I think Janet Yellen was talking about this, how she expects it to be transitory and everything is going to return back to normal and we're going to kind of normalize out and go back to some of the rates we've seen historically after the 2008 financial crisis.
So basically, we're going to have a little pop in inflation and then we're going back down to 0% rates.
I mean, that's what I'm gathering from how they're describing what's going to happen.
Trav, is that true or not?
That's what the Fed wants to happen. That's not what's going to actually happen.
Tell the world what's actually going to happen.
Well, we've been saying over the past couple months, I think this could be longer than transitory. First of all, I don't know exactly how you define transitory. Is it 3 months, 6 months, 12 months, 18 months above the Fed's 2% inflation target? But the risk here is that consumers and others and businesses start to behave that like we're in an inflationary environment for a longer term or on a medium term at least, right? And that will just help that inflation persist. And so the Fed's got tools, obviously, to pull back on the monetary supply growth and things like that. But when consumers are going out and they're buying all the gas at the gas stations because they're worried about shortages, you know, when they're doing that in the lumber market, when they're doing that in the copper markets, when they're doing that in the semiconductor markets, when businesses and consumers start behaving as if they expect inflation to persist, then you're going to get persistent inflation.
Yes, it's a self-fulfilling
Prophecy.
Yes.
Exactly. We talked about it. It's happening. We're in the earlier stages of it, and the numbers are finally showing it.
So let's make some, I hate the word predictions, but let's make some predictions. Like, do you think this is the start of a shift in long-term interest rates?
I just have to interrupt for a second.
Yes.
Okay, because basically, you were talking about. I feel like we went from you were talking about how sometimes it's a self-fulfilling prophecy. If you think inflation's coming, you're gonna go buy all the things, right? Well, I feel like we went from no whisper of an oil shortage. No one had to worry about gas. There wasn't even a talk about it. We went from that to, oh my God, everybody's going out and buying gas, and you can't buy gas in the Southeast. You can't find it anywhere.
Well, that was due to a hack, right?
Well,
the pipeline
but it felt,
software.
The actual, I mean, we were just over there. The actual, it felt like normal over there, right?
Except when we were leaving, we noticed the gas stations were like half out of gas. I'm like, what's going on? But I didn't even know this was happening at the time.
Think about it.
Yeah.
And like it didn't, people weren't panicking. People weren't lining up to the gas pumps.
Now they are.
Yep.
But now they are. But it felt like it happened overnight just from a whisper of it. And people, of course, start hoarding and make it worse than what it actually is.
The timing could not be worse.
So it's toilet paper 2.0.
It's yes, but it just it drives that point that Travis is talking about, that sometimes that's how it works.
Yeah.
Yeah, the Fed thinks that it has more control, I think, sometimes than it does. There's so many inputs in these macroeconomic systems, and so like when consumers start behaving a certain way, these things can happen quickly. And look, I mean, the gas shortages hopefully will be fixed, you know, in a matter of months. Hopefully even shorter than that, but the timing could not be worse, right? You're headed into the summer driving season in North America. You've already got the refiners who pulled back on production last year because of COVID, and they're starting to kind of catch up to this growing demand. Demand's starting to explode higher, and then you have a pipeline shut down because of a cyber attack. But the problem is, like, these things could continue to happen in all areas of the economy, right? As consumers and businesses start.
Yeah. I mean, can we talk about the real panic, the real problem?
This is a crisis.
Chick-fil-A has a sauce shortage.
That is a crisis.
I don't know about you guys, but we need to go stockpile right meow.
Polynesian all the way.
Yes.
For those of you who don't live in North America, Chick-fil-A is probably the most beloved fast food restaurant in the country. There's always lines around the block for these things, and it's delicious. But
why is there a shortage? Did you guys read this?
I actually haven't looked into why there's a shortage, but I saw last week there's a shortage of self-serve ketchup packets for other fast food restaurants.
Yes.
And I think it has to do with the production of plastic or some of the inputs into making those self-serve packets.
Yeah.
Not necessarily like the ketchup or the sauce itself. I think it might be the packaging.
Weird.
I may be wrong on that, but that was my understanding of with a brief glance at some of those headlines.
Well, I mean, there's a shortage of commodities. Obviously, there's also a shortage of labor, right? So what does labor shortage mean for unemployment benefits? We can talk about that. But I found it really interesting kind of driving through some small towns over the past week, looking at the hiring now and offering bonuses for, fast food restaurants and stuff like that. What do you guys make of that situation?
It's real.
I think we kind of talked about this last year, how this could be a possibility, that if you keep unemployment benefits, extra unemployment benefits going for a long period of time, the lower income earners that work in the service industry and at the fast food restaurants, they have less of an incentive to get back to work. And there are a few different reasons why this is happening. People are either afraid to go back to work because they are afraid of getting sick, or they have children at home that they have to take care of because maybe school in certain areas hasn't gotten back to normal. there are a slew of things, but this is proving to be a real true problem to the point where there are certain states that are actually cutting off the federal extra unemployment benefit completely by a certain date. And they're not letting it run through September because they need people to get back to work. There's also, I think there's also a state that's giving people $1,200 bonuses if they take a job and get off unemployment.
Wow.
Think
So it's
about
like
that. It's worth it.
a re-employment benefit. Yeah. What would you call that?
Yeah.
Re-employment benefit.
And that we're hearing that fast food chains are having to increase wages. Other, employers are having to increase wages. We're hearing employers having to give interview benefits, like, hey, we'll pay you $50 just to come to an interview. We're hearing that they're giving sign-on bonuses for them to actually take the job.
Yeah.
So that tells us that people are not coming to work.
You know what? I feel like that's a good thing, right? Because obviously minimum wage and lower end wages haven't kept up with inflation. And the people that were told they were the most valuable, critical, crucial, important employees during the COVID crisis were the lowest paid and treated the shittiest. Good. Pay them more. I don't know. What do you guys think?
Yeah. I think that's very true. And I think it's going to be interesting to see how wage growth looks going forward as we go into this recovery, and kind of how that plays into inflation being a bit more permanent rather than transitory, so to speak. Would you agree with that, or do you have anything to kind of add to that?
Yeah, I think labor is a really important input for the overall economy, and so wage inflation will definitely help keep a bid under inflationary pressures. And I'm with you, Chris. I think it's a good thing overall. Like, I think wages haven't kept pace with general inflation, and so it's maybe time for that to catch up a bit. And that could actually be good for the overall GDP growth and overall growth of the economy. As you put, the service sector employees, the bottom half of the income distribution has a pretty high propensity to consume. So it's good to put money in the hands, as we saw with the stimulus. And I think ultimately it'll be a good thing. It's going to cause corporate margins to decline, especially for certain areas of the economy. So I think we've probably seen corporate profit margins peak, at least for the next 5 or 10 years on average. Now, some corporations are going to be able to expand their margins still, but I think on an overall average basis, we've seen that trend finally peak.
Or
Is that why stonks have been pulling back pretty hard?
Yeah, it's definitely got to be one of the reasons.
They'll
Yeah,
also
so
pass along costs to customers,
right,
too.
right,
Businesses
which will fuel
Which will
inflation. Yeah.
Right.
Yeah, businesses that can pass along those cost increases will try. And in fact, we've already seen a ton of companies in their earnings reports here in the last 2 or 3 weeks talking about putting price increases out there and planning for price increases throughout the year.
Yeah.
Especially because their input commodities, not only labor, but steel, lumber, copper, all those things are up. Food prices, ag inputs are up a lot too. Corn has been parabolic. So, yeah.
So bullish for hard assets like Bitcoin, real estate, even like real housing and property. Bearish potentially for equities, paper equity.
It's a bit more complicated than that, but generally, yes.
Yeah.
Generally, yes, but it's more complicated. In the equities market, with stocks especially, it's going to be a game of winners and losers.
Yeah.
I don't know exactly what that means for the overall indexes. For maybe some of the more highly valued, high multiple indexes, like the NASDAQ or some of the growth indexes, those might be in trouble to some extent.
Yeah, it looks like the NASDAQ is 8% off of the all-time highs as of today. It was down almost 3%. So
Yeah.
And the S&P's a lot less.
Yeah.
It's about 3.5%-ish.
Okay.
So, yeah, I mean, that just shows you the difference. And the NASDAQ typically holds growth companies, tech companies that have had higher valuations.
Yeah.
So that explains why it's selling off more.
This environment's very reminiscent of the 70s, when not only did you have some disruptions in the economy, you had some inflationary pressures, but then you also had things exacerbating it, like the oil embargoes and things like that. It's very similar to how some of this is playing out. And during that period, we saw a lot of valuation multiple compression in stocks during some of those years in the 70s. Now, there were some stocks that still did really well because they still grew through it, or they had pricing power or whatever, and we'll see some of that too here. But but I think there's generally some concern among stock investors about what that means, and bond investors too are really concerned. Yields on bonds, even high yield bonds, are still very low. And if you've got to push rates up in the next year or two to try to deal with inflationary pressures, bonds could get crushed. Bonds seem like a really tough place to be.
That's what I've been thinking.
Yeah.
I'm like, who's buying bonds right now?
Yeah, I mean, we've seen the flurry of buying coming into crypto, and obviously a lot of really big famous names. Who was it yesterday that said the U.S. dollar is slipping?
Miller?
Yep. Within 15 years, the USD is going to basically lose reserve currency status. I know that's a contentious topic, and there's some people that agree, some people that agree or disagree. Yeah, Druckenmiller said it's more likely than not within 15 years we will lose reserve currency status. I think it could actually happen faster than that, but then you got smart guys like Colin Roche that obviously argue the other side of that. I don't know. What do you guys think?
There's no, I think this is a hilarious topic to argue about, and really not that productive, to be honest. Reserve currency status and all that. Like, yes, it's important that the dollar is used for cross-border trade in a lot of different countries. There's still a lot of countries using the US dollar as a peg, etc. But there's no one that goes, you have global reserve currency status, you don't have global currency status.
Yeah.
Right? The euro is still very important, and technically it's not the global reserve currency, right? So the US dollar, I think, will lose probably some of that influence that it's had, as it should. But I don't think that it means necessarily like that. I don't think the conclusion is that that's going to create some massive crash in the US economy, right?
Yeah.
But I do think the dollar, especially if we see a continuation of what we're seeing on the profligate fiscal spending side, then the dollar's at risk of depreciating against other currencies.
Yeah. Yeah, I mean, it feels good to be long Bitcoin, as we've been saying for a long, long time, and I haven't changed my stance on that. But with that said, market sentiment has definitely been freaking me out recently.
Yeah.
On the Bitcoin side, we can talk a little bit about that.
Okay.
We basically had, 6 straight months of massive gains, and then as predicted, last month was basically a pause. We had a little bit of a doji candle, and then as of right now, here in May, Bitcoin's pulling back a little bit. Let's talk about the biggest crypto news that happened today. So, in every bull market, in every crypto bull market, in the later stages of the bull market, you start to get a lot of scams that pop up, a lot of copycat coins. I even had a guy that I haven't heard from in like 20 years hit me up yesterday going, I want to, start my own crypto. Like, how do I do that? The gold rush is on again, right? The last time this happened was in 2017 with the ICO scams. Now it's like meme coins and copycat coins and all this bullshit, right? So when I see this, I just start to get freaked out. Am I a bull long term? Absolutely. But, when markets go up a significant percentage and then you start to see newbies bragging about their get rich quick gains, that doesn't continue forever without a nasty shakeout, right? So today I basically sent out a tweet storm and said, like, I started taking profit. I have sold pretty large positions in some of my largest positions, meaning sold some pretty significant stakes of Bitcoin, Ethereum, Link, some of the other big ones that I've been holding for a while. Not that I'm a bear, I'm still heavily long, but for me, it was a combination of market sentiment, also my personal risk tolerance for like what I want my net worth in crypto to be. When that starts to get over like 50%, that just pushes my comfort zone.
That's high.
It's very high.
It's extremely
It's very high.
Most people would tell you you're nuts.
I know, but that's why I've made a killing in crypto
Yeah.
over the past year and
Understood.
previous market cycles. But the higher we go in the cycle, the lower I want that number to be, right? I like to sell and trade to accumulate dollars at the high and then accumulate Bitcoin at the low. It's very simple, but a lot of people overcomplicate it. A lot of people troll me saying, oh, you sell too soon, which sometimes I do. Sometimes I leave millions on the table selling too soon, but I'm okay with that. It's all about risk management. And that's kind of the reason why I started to scale out. but I have a lot of capital now that I can buy back on dips. I can add on future breakouts. So I like that kind of middle path of I'm never going to sell everything. I'm never even going to sell a majority of what I own, but I'm going to take profit and feed that machine.
Yeah,
you
we
know,
talk about that a lot. Letting the runner run, take the profit at the top, things start to look a little sketchy, pull it out. And then if Bitcoin does in fact pull back, which you're right. I mean, I think that you're very valid in all of the things that you're talking about. And even in the chart alone, it's kind of in that like questionable zone that we were at with the stock market too.
Yeah.
And easily you could see a huge pullback in a lot of these cryptos.
Yeah. And look, there's nothing in the on-chain data that's suggesting we've topped out in Bitcoin yet. That could fail us, or it could prove to be true. And if we do get future breakouts above 60K, I'll likely trade them, like it doesn't have to be an all in, all out type of situation, but I just like to think about risk. And when the markets go up 500%, 1,000% or whatever, it's prudent to take profit,
Absolutely.
Yeah. I think a lot of people get caught up in that all in, all out mindset.
Yeah.
They feel like they can't do what you're doing, and they can. You don't have to give up your position, your full position, but think about what that profit could do for your financial plan. Like, hey, if you're going to be able to lock in money and pay off your house or something like that, and you're still going to be long Bitcoin and still have a significant position, that's a win-win.
Absolutely.
To me.
Yeah, there's definitely a middle path there. Let's talk about the rug pull. Okay, there have been all these meme coins that have popped up recently, and a few of them like Shiba Coin, Dogilon,
Are these can you
Akita.
explain, like,
No,
the
I'm not
five-
going to go into the
No,
fundamentals
are
of
these
this
just
shit.
random coins that people create?
Yes.
Is that all it is? Like junk coins?
Yes,
Okay.
it's meme coins. Some of them have some kind of value and use case. Some of them don't at all.
Okay.
I'm not even going to go into this. All I want to show is what happened. So a lot of these projects gave Vitalik like 50% of the supply, and basically said to the community, if Vitalik doesn't screw us, we're all going to get rich, And what did he do? Well, today he did a rug pull, and he basically started dumping a lot of these tokens. I'll link this up in the show notes. Larry at Lawmaster on Twitter basically showed all of the projects that he started dumping, and Vitalik donated. And again, this recently just happened. Donated 50 trillion SHIB tokens worth a nominal 1.2 billion to the India COVID Relief Fund. So this is huge. And even Paul Graham tweeted a picture of Vitalik's face today on Twitter, which I thought was pretty crazy.
What a legend.
Yeah, that's amazing.
Yeah. So he's trying to do good. Also, I think he's trying to maybe clear up some of the congestion on the Ethereum network. I don't know, but this is just case in point of some of the insanity that happens in the later stages of the bull cycle. So when I start to see this stuff, I'm like, look, I'm rooting for you guys, right? But I know how the markets work. I've been through every market cycle in Bitcoin since its inception, and I see the writing on the wall. So I don't know. I don't really have anything else to say about that.
Yeah, there's been some weird signs of crypto entering the mainstream culture over the past few months, and things like Paris Hilton tweeting about it, and some stuff that makes you cringe, other stuff, the Elon SNL mention of Doge, all that. Some of it is really fascinating though, where you've got people discovering it for the first time and going down the rabbit hole.
Yep.
Obviously, you've got all the institutional support that we've been talking about over the past year.
Tom Brady just put
Tom
on
Brady
the
with
laser eyes.
Yeah, the laser eyes. Some of that's definitely makes you go, oh, I don't know. Like, I don't know where we are in the cycle now. When we get this, celebrities tend to be like in that low information participant group typically, and usually late to trends.
But net over time, I think it's all a positive,
Yes.
right? And I don't want people to get us wrong and say like think we're making fun of it or shitting on it. We're not. We're just saying timing matters.
Yeah.
Right. Like timing and where you participate and when you get in and out matters.
Yeah, and how you react if there is, price changes that go against you in the short run and things like that, and being prepared for market cycles. That's why we do this podcast, is to try to help people navigate that. And I will say there's also a lot of really fascinating things happening in the crypto ecosystem from a fundamental standpoint, development of projects, of DeFi, of CeFi, of NFTs, of Web3. Like there's been some really interesting pieces on Web3 that I've read over the past couple of months that have me really turning the wheels about what's possible in the next 5 to 10 years. And I think this is not going away. And anyone who says it is got such blinders on about what is happening in the world.
Yeah.
Now, I think cycles are going to happen in prices. My guess is, at least for Bitcoin and Ethereum, the next bear cycle hopefully won't be as bad as the 2018 one.
Yeah.
That's my guess and my hope.
I agree, but it depends on how parabolic things get.
That's true.
And how many scams are able to operate and how many Ponzi's collapse, right? Like
True.
last market cycle, it was so bad. There were so many scams. And Ethereum was tied to a lot of them that got tied up in the ICO fundraising.
Yeah.
That's why Ethereum's price was in a 2-year bear trend, right? So I prefer slow and kind of methodical bull trends than you wake up every day up 50%, up 100%. Oh my God, it's up 500. When that starts to happen, it's unsustainable, and that's where you get those tweezer top crashes. So I'm like, all right, prices have been going up. If you just look at a chart, like a monthly chart of Ethereum, I mean, you can see on a percentage and a nominal basis, like the monthly candles have been increasing in size.
Spectacular.
Yeah. I mean,
Honestly.
when I had a lot of conviction, which is why I made this a pretty heavy size for me. It was the most I ever bought of Ethereum in between like the 300s and then the 1400 breakout. Had a lot of conviction, but you can see the trend is now starting to speed up. Now, just because it's speeding up doesn't mean that has to be the top, right? You can have short-term parabolic moves, and then if price stabilizes, washes out weekends, stabilizes, and then gives you another breakout pattern, you can rebuy in at what seems like high prices, right? 2017, we thought 3K was high. We thought 5K was high, right?
Yeah.
Like all those breakouts worked though. So you can make money even after you get these little parabolic moves. You just have to really understand risk management and timing.
And be patient to allow the market to kind of work.
Yeah. Yeah. All right. Let's talk about, I sent a poll a few days ago. This show is called We Talk Money. And I think one of the most interesting and important questions we can ask is, what the hell is money? What is it really? Like, is it the dollar? Is it Bitcoin? Is it gold? Is it seashells? That definition changes over time. But one thing that I think is constant, and one thing that money maintains its value the best through, is trust, right? So I tweeted this. I said, if money equals trust, then what monetary system will attract and maintain the most value over the next few decades? And the options were, number 1, government-backed currencies; 2, precious metals; 3, open source code; and then were there any other kind of random options? But, my audience or my following is obviously
I was gonna
a select
say, this
group,
is a bit
right?
skewed.
75% said open source code. I'm surprised that 7% said government-backed currencies, 12% or 13% said precious metals. I think that's really interesting that, 75% of people, even if they're a select group, right, they're pre-qualified, say open source code is the best form of money. Like, that's really interesting to think about, and that's really, I think, powerful and says a lot about where we are as a society. I wonder, like, if you surveyed not the whole population of, say, the U.S., but people that are active investors, I wonder what that percentage would be.
I mean, really what this gets at is you're asking, you said it in the word trust. You're asking, who do you trust to run the monetary supply? a certain set of elected representatives in government or rules that are encoded on a public blockchain.
Yeah.
Now, I would say that there are some challenges today, even with encoding monetary rules on the blockchain, because we don't all agree on how it should be done.
Absolutely.
Yeah.
And I would also say that there's still technological risk that we may not understand, right? But I think we're all starting to realize that trusting some small group of individuals at a Federal Reserve type of institution or individuals at the political level, for God's sakes, is kind of scary as well.
That's all the subjectivity that goes into monetary and fiscal policy, right?
Yeah.
Versus open source, where it's a set of rules that can't be changed and boom, 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 here it is. What we have now is there are a lot more thought leaders pulling strings and subjectivity.
Yeah.
Kind of.
And there's that constant battle between, the hard money purists, gold bugs, crypto bugs, versus, traditional finance people that are like, look, we need flexibility in being able to create money so we can stop recessions or depressions. And there is some evidence for that, but there's also evidence that causes a ton of problems too.
As we're seeing this week.
Yeah.
Yeah. So,
But did they stop the recession from being worse than what it could have been if they didn't come in?
At what cost, though, right? It's like, are they just kicking the can down the? I mean, that's the $200 trillion question, right? And
Yeah.
I just think it's interesting that more people are waking up to the idea that like we trust math and open source code over the goodwill of leaders and politicians and central bankers, right? It's not hard for us to like get that, but it's interesting that millions of people are waking up to that fact. We're going through like a huge transitional period in the history of humanity. I mean, it's a cool time to be alive.
Absolutely.
I think so too. And I think a lot of people that are ignoring DeFi and not learning more about it, they're going to be, I think they might end up being left in the dust. Crypto, period.
Yeah.
A lot of advisors specifically that I read all kinds of things and I see what people say. And
Yeah, let's hear
There
some of the
are
stuff that the financial advisors are saying.
you want to hear one that I read today?
Yeah.
So there was an advisor who had a client that wanted to get more gold in the portfolio because of the inflation concerns. There was an advisor that replied saying, basically, hey, you should probably fire that client because, like, that's stupid, essentially. Like,
Wow.
it just blows my mind how advisors can be so one-sided to thinking about investing strategies only one way. It's
Yeah.
like one way or the highway. They're kind of stuck in the dark ages in a way, have a portfolio of stocks and bonds and but there's so much more going on in this brand new asset class, and there's so much more going on with fiscal and monetary policy and this MMT experiment that people should be exploring other avenues to be diversifying their portfolio the right way. And it just is amazing. Not all advisors are created equally. Like, I'm just going to say that.
Yeah.
Like, whoever you're working with, vet them. Make sure that they understand all of these asset classes. They're not tunnel visioned into one way of investing. I think that's very dangerous. You have gold. We all have gold in our portfolio. There's nothing wrong with putting gold in a portfolio. That's been a proven asset class. So, yeah, I don't know. That's my 2 cents on that.
The crypto guy holds stocks and the stocks guy holds crypto. Just saying.
Well, the stocks guy made more money on Dogecoin than I did.
Yeah,
So
exactly. Like, hey, this is not, we don't have to be one-trick ponies here.
Yeah. Exactly. I think, if you look at like the average financial advisor, they're not professional investors, right? Like Travis in the hedge fund days, you spent your days like analyzing potential investments. Financial advisors sit down with clients and they're just like, how can I make sure I don't lose your money, right? I'm not going to necessarily try to make you the most money, but let me gauge your risk tolerance and then try to package you into a thing where I can earn a piece of your investment portfolio, right? They're not thinking like strategically and how to grow capital and compound it, right?
The best ones
well,
are.
the best ones are. Yes.
But
the
what
best,
are the? What
But
would
the
you-
average person, your average
average-
financial advisor is not that,
There are
right?
a lot of advisors out there. All they want to do is sell you their mutual funds and get their
Or
get
insurance
their
or
commissions or their insurance or whatever, and or they are just one trick ponies with a stock bond portfolio. They're not thinking outside the box. It's such a dynamic industry, and you can come across so many different ways of thinking in it that it's almost kind of scary, to be honest.
Yeah.
It's like how does somebody sift through all of that to find the perfect advisor for them? You know,
Yeah.
you just got to ask a lot of questions. I say educate yourself first, because like all of the people that are watching this, maybe they want to work with an advisor that understands crypto now, you know, and so they're going to ask those qualifying questions. So I think educating yourself first goes a long way with figuring out who to work with and how to work with them.
Tell me what you think of this. My opinion is I agree completely with you. Like, you should educate yourself and learn how to become your own investor. It's your capital. Like be a steward of it. Learn how to grow it. Learn what you're doing. I get that, you know, people that have full-time jobs, they can't necessarily watch the markets all day. But if you are serious about growing your wealth, learn what the hell you're doing. Even if you just want to be passive, right? And, you know, use robo-advisors for your passive portfolio, that's cool. But also get like maybe a financial planner or a RIA or something to kind of guide you, but don't rely on them to tell you the best way to grow your capital.
Well, to your point of educating yourself first, even if you aren't going to do it yourself, like robo-advisors, some of them, it's only stocks and bonds. You can't do commodities. You can't do, you know, like you can get gold, you can't get crypto, you can't
get angel investments.
You can't diversify in a way that you maybe want to. Or maybe they put you in something that you look at it and you're like, I don't want to be this exposed to emerging markets, or I don't want to be this exposed to US markets. And like, you at least have some baseline knowledge to where you know if something is going to work for you or not.
Yeah.
So
Which, by the way, I think this is a good time to say we are not financial advisors. This is not personalized financial advice.
Yeah.
We just want to teach you what we're doing and how we do it. But our risk tolerance is different from probably everybody that's listening to this. So just educate yourself, I think, is the biggest point. Yeah. Okay, cool. So moving on, we talked about the rug pull. We talked about inflation. We talked about the sad reality that Chick-fil-A has a sauce shortage right now. This is kind of the other point to the inflation argument, though, is that, you know, like I think you guys mentioned this early last year during the initial COVID panic, we actually had some deflation. And so if you look at where inflation numbers are now, they're not exactly high, but this is, I think the danger that people could miss with this is this could be the start of a self-fulfilling prophecy, right? Like, if this isn't just, you know, a pop and flop in inflation, if this is something that's a bellwether of future higher inflation, that's the real danger, right?
Yeah, I think the nuance is going to be missed by a lot of the market participants because, yes, it is worth pointing out the comparisons to last year, April 2020, May 2020, when we were really in the depths of the COVID crisis from an economic standpoint, you know, the comparisons now this year versus last year are going to look really strong.
Yeah.
Year-over-year growth rates for many things, whether that's, you know, travel, consumer spending, retail spending, foot traffic, you know, gas demand, all that is going to look astronomically high relative to last year's low numbers. And even the CPI is going to look strong relative to last year just based on the seasonality. But I also still think that we're going to continue to see, I don't think this +3, +4, maybe even higher type of CPI number is going to go away even when we get to easier comparisons in the fall, just because, again, I think we're already seeing supply chain issues playing out, consumer behavior starting to exacerbate inflation in certain ways. I could be wrong, but I think people, and especially investors, are going to basically think that they're going to take the position that this is not transitory, right or wrongly. And we need to be prepared for it as investors.
Yeah.
We need to be thinking about the positioning that makes sense. And that's why we've been talking about it for the past basically 4 or 5 months.
Yeah.
About, you know, being aware that this is coming down the pipe.
Have you had any change of thoughts or thinking to how you're going to manage risk on your portfolio. I think you put on a hedge, right?
Yeah, I put on some hedges 2 weeks ago or so, but that wasn't really as so much for the inflation issue. But I've been thinking about how to position the portfolio since the beginning of the year for inflation, and I added some gold bull call positions that initially were doing poorly, now starting to catch back up and do well. I've got pretty good mix of value in the portfolio in addition to some of the growth stocks, which has helped a lot. Some of those value stocks have done really well. So even in the past couple of weeks of the market environment, so that's helped a lot. But yeah, being very diligent about what stocks. I'm also thinking a lot about when I add new positions, what businesses are going to be able to benefit in an inflationary environment. What businesses can pass along price increases? What businesses can maintain margins? And what businesses don't need to, like, for instance, refinance a bunch of low-cost debt to high-cost debt and things like that.
So healthy balance sheets.
Yeah. And yeah, I mean, that's been a big focus on the researching new positions is, okay, making sure can these positions that I'm adding still benefit if we go through three years of pretty nasty inflation.
Yeah. Good stuff. Nick, what was this you pulled up here on Y charts?
Did we pull up the indices, the sell-offs on the S&P and the NASDAQ? Yeah. So I was just, Trav, correct me if I'm wrong here. You can go back to that Y charts table. The NASDAQ, this is the NASDAQ PE ratio. At the end of 2020, was it at 100?
Yeah, it was near its all-time high, I believe.
Holy moly.
So the average PE for NASDAQ stocks was 100?
So the problem with that too is that it does include the period, that first quarter or two of COVID, where earnings got smashed for some of the companies in the index.
Well, it's now come in a lot since then. It's back to basically, I want to say, it's cut in half almost.
Yeah.
So it's definitely come in a lot, which is, I just wanted to point out how much it's come in now that we're having earnings come out. We're seeing earnings reactions, which have been actually
underwhelming,
kind of muted.
Yeah, underwhelming relative to the strong performance we're seeing with a lot of these companies.
Yeah, that's been very interesting.
So that's why things are pulling back.
So
what are some examples of some high flyers that disappointed?
Well, you could look at even the big tech stocks that have sold off after their earnings, like Facebook and Apple, which reported like blowout earnings. Or you could look at some of the smaller mid cap companies that people have been excited about, like your Datadogs of the world, your Snowflakes, your Airbnbs, Coinbase, obviously. So those still expected, like Snowflake, for instance, still expected to, and they haven't reported yet, I don't think, for the most recent quarter, but Upwork, for instance, is a good one because they showed accelerating revenue growth. Not just growth, but an accelerating rate of growth over the past 3 quarters, and yet that stock is down a good 30-40% from its early year highs. We see a lot of charts that look like this. AMD, blowout earnings, raised guidance for the year, and yet the stock is down, right? So we see so many of these in the market. That's been the theme since almost the beginning of this earnings season, has been actually pretty strong corporate earnings across the board for most of the growth stocks, but the valuation multiples have been compressing because of sentiment changing, because of concerns about inflation. In the 70s, we had pretty severe multiple contraction in valuations, and so that's what investors are worried about, is like these high valuation stocks. Are we going to see, even if they grow, if the valuation multiples contract, you could actually lose money. Those stocks could be flat or down for years.
Yeah. Especially if interest rates rise eventually, people are going to, pull over to the less risk side to get the yield. And so, it changes the dynamic a bit with growth stocks. And especially with some of the valuations we saw in 2020.
Things got insane.
Yeah.
Talking about crazy valuations. Taking a look at Coinbase. Yeah. So I kind of was, I don't know if I marked this up on the show or if I did. Okay. Yeah. So basically when Coinbase listed, if I remember correctly, my prediction was on the money. I wasn't off by a factor of 10 at all. No, just kidding. I terribly misjudged the IPO. That's why I don't buy IPOs or direct listings or whatever. What I was saying though is I like to see that this kind of sold off, and then you can see kind of some basing here. So I'm interested in Coinbase. I'm salty that I didn't get any of the early stage equity, but yeah, if we can get like an accumulation range breakout or something here, what do you guys think about the valuation around like 250 to 300?
It's interesting. At 250, you're looking at about, I believe, between a 50 and 60 billion dollar market cap, and it actually looks relatively inexpensive on this year's numbers. And they actually report earnings tomorrow, by the way, for the first quarter. But they have already kind of previewed it, and they previewed it just before they went public with the preliminary Q1 numbers. So we kind of already know what the numbers are going to be. And it was like over $1 billion of EBITDA in one quarter. And if you run rate that for the full year, and the second quarter might even be better than the first quarter, honestly, given what we're seeing in crypto, Coinbase actually looks relatively inexpensive if you're using 2021 numbers, assuming like the crypto cycle doesn't just crater for the rest of the year.
Okay.
Now, the question is, what are normalized earnings for Coinbase? What is it going to look like in 2022 if the crypto cycle cools down? What is it going to look like in 2023? So
That's
I think
the trick.
a lot of people are having a hard time figuring out what the appropriate valuation multiple is to apply to current run rate earnings.
Yeah. So I guess the way that I'm thinking about this then is if valuation is tough and future earnings are kind of tough to predict, maybe just let the chart be a guide in a way.
That's what I'm doing.
That's what you're thinking? Yeah, so see if we like kind of base out in between like 250 and 300, and then if we get a breakout of that range, maybe that could be the start of...
It's going to be a mix of three things for me. It's going to be that, letting the price actually talk to me and work itself out. It's going to be what happens in the broad markets, meaning the S&P and the NASDAQ. Because if we see that come in more, that could affect Coinbase no matter what.
Yeah.
And then it's going to also be what is crypto going to do from here? Because crypto is kind of at this decision zone too of, hey, do we continue to go parabolic in Bitcoin, or are we going to see finally a pullback?
Yeah,
So-
which even if, I mean, if there is a crash, like my prediction is that Bitcoin and Ethereum and large cap volume won't fall off that much, but a lot of the smaller cap stuff will. That liquidity could kind of dry up and trading fees could kind of come down there. I don't know.
One of the things that makes Coinbase particularly hard to value right now, as well as what does the longer term market share look like for them? Are they going to get crushed, or are they going to lose market share to DeFi or BlockFi or other players over time? Or do they have so much good stuff on the product roadmap through STOs and institutional custody solutions and all kinds of the other things that they're building around just the trading aspect of it? Can that bridge them to a much bigger business in 5 or 10 years?
I think that's a much bigger threat than just trading volumes.
I was thinking about that exact point too with like traditional financials. They're probably seeing a lot of money come out to go onto these exchanges. And my question would be, are they really just going to stand by and let it happen, or are they going to try to get into the crypto game too?
Coinbase's fees are quite high.
Yeah.
At least for retail, for retail investors.
They are. And I think the flow is, most people start on like Coinbase retail, and then maybe they'll get Coinbase Pro and then go to FTX and Binance and blah, 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 right? So there are some pretty heavy competitors. And I think we mentioned this last week or the week before. Their fees will definitely get compressed. It's just like, the old futures and stock commissions, right? Like back in the early 2000s, it was expensive as hell to trade.
$7.95.
Yeah,
one
$7.95, $14 round trip E-mini futures trades. Like, that's crazy. And now you get free stock trades and whatever. So, I don't know, man. This is a tough one, but I mean, I'm bullish in general on crypto exchanges because they're damn cash cows, but who's going to win and what's the 5-10 year roadmap look like? I don't know.
Yeah, I mean, if this thing came down to, a really, really cheap looking valuation in a down market cycle, I think that would probably give you a better risk reward for that type of thing, where you're like, okay, there are some longer term risks with competition, fee compression, etc., but I'm not paying as high of a valuation multiple, so that kind of offsets that risk, right?
Well, hey, I mean, we didn't think Airbnb was ever going to come down, and look at that.
Yeah.
So
I haven't looked at this in a while.
You never know. You know, you never
Oh,
know
wow.
what these things are going to do.
Yeah. What do you guys think caused this sell off, or is it just?
It's just a part
Normal.
of what we've seen with a lot of the growth and momentum stocks selling off. If you look at factor performance, which is a way of saying parts of the market that are categorized as either value or growth and momentum or dividend paying stocks, or there's a bunch of different factors you could classify stocks into. But if you look at certain classifications of these factors and the performance of them, the momentum factor, which was really strong last year, and really strong in January and February of this year, has actually been the worst performer by far in the past 2 months. And so Coinbase or Airbnb is part of that. Any recent IPOs or growthy type of stocks, mostly part of that, with a few exceptions.
So are you guys getting excited about any of these plays that are coming down?
For sure.
Yeah.
Absolutely. There are some, and I actually added one today as a starter position, a new position that is a software company, and software companies have not been cheap over the last decade at all. But this one's actually relatively, reasonably priced, I think, in my opinion, trades at a low end of the valuation range, has good growth potential, and that's the kind of stuff. If you can get the longer term plays during a market that's punishing everything, I think that's like such a fantastic way to play.
Yeah,
it.
and that's how it went in March of 2020
Yeah.
when we were cleaning up.
That's why every time I hear Nikki looking at her computer screen and going, "Damn it, the market's not coming down." I want the market
literally
to sell
do
off.
that. Real talk. I can do that. Like when the SP made all-time highs last week, I was like, damn it.
One of the things that's actually brilliant, because one of the things that's counterintuitive, especially for a lot of beginner investors, is if you're young and you expect to have capital that you're going to be putting into your accounts over the next decade or 2 decades, then you want the markets to get cheap. You want there to be sell-offs and opportunities to acquire things at lower prices. The idea that you want the market to just be at bubblicious crazy levels all the time is actually counterintuitively not in your favor if you're a younger investor.
Yeah. Well, the other thing is we're going into tax time where people are funneling money into their retirement accounts. And one thing that I know I do is I'm looking for these opportunities to funnel money into retirement at these times when the market's selling off, because I knew when I was looking at the market making all-time highs, I knew that time was coming too, where retirement contributions had to be allocated. And so I was waiting and waiting and waiting, and when I see these opportunities, that's when I strike. So I do put a little strategy into even that.
Yeah. No, that's really smart. We got a comment says, "I think Coinbase eventually becomes the Visa of crypto. Sadly, I do see crypto becoming regulated in the coming years, with Coinbase becoming the most, quote, trusted outlet." Yeah, I mean, I think there's going to be a couple of sectors here. It's going to be, centralized exchanges. That's not going away, but I do think decentralized exchanges are going to garner more and more growth, which, I mean, we've seen insane growth over the past year already. Let's just take a look at DeFi Pulse, and just taking a look at total locked value in DeFi right now is 85 billion. If you look over, let's go back to, January of 2020, there was basically nothing. It was less than $1 billion. And then by the end of 2020, we were at call it 10 to 15 billion. And then today we're up at, 70, 80, 90 billion. So this is growing incredibly fast. And the DEXs, or decentralized exchanges, are definitely attracting more and more capital and more market participants. But I don't think the Coinbases and the Krakens and the Binances of the world are going away. I think it's just going to be kind of parallel avenues there.
Yeah, I would imagine that a lot of people don't trust themselves with custodying and handling their own money and crypto.
Yeah.
Right? Like, I'm sure there's a percentage of the population, a large percentage, that feels comfortable with some type of centralized entity.
Yeah. There's 3 levels, right? It's like, at the highest, most broad level, you've got average mom and pop that's like, I don't want to worry about my wallet. Can I get an ETF? And can my financial advisor manage that? And I don't have to worry about getting hacked. The second layer is people that are like, I'll have a Coinbase account and I'll trade retail, and, I'll go through centralized exchanges and trust that they're not going to rug pull or exit scam or whatever. And then there's the third layer of degenerates, which are like, hey, we're going on the decentralized exchanges. We're going to push the limits. We're going to look for yield, right? So that it's like and those people make the most money usually. So that it's like the more risk you take on and the earlier you are, the more money you make.
Naturally.
That's
the risk for us.
I love it. Let's take some questions, guys. What questions do you guys have about markets, about economy,
a
crypto?
buddy of mine had a question that he texted me earlier today about the crypto side. He said, he just put some money into crypto this week and it's still a little bit over his head. Any resources you'd recommend for beginners?
For crypto beginners?
Yes.
Yeah, I mean, check out my YouTube videos. I've got some videos going back to 2013. And then obviously our community. I've got free Bitcoin Basics course on the website.
Yeah, so the Bitcoin Basics course I think is a really good one. And you've got on your YouTube channel, there's some series of videos that tackle. Yeah,
there's a playlist. Some of those are outdated. I haven't done a lot of new videos recently, but a lot of those are still valid.
Yeah.
And just dive in. Like my biggest piece of advice to people new to crypto, it's like just dive in. Don't overthink it. Just start looking. But be fast with your education and fast with like learning and diving in, and really slow with your capital in the beginning, right? Learn about security, learn about hardware wallets, learn about exchanges, learn about how to identify a scam or something that has the high probability of getting rug pulled, right? And learn about risk management, and then decide like, okay, how much of my capital do I really want to allocate to this, knowing that I could lose it all if I screw something up, or if I make stupid decisions, or if the markets crash on me or whatever. Invest an amount that if prices went down 90%, you wouldn't get wiped out. You wouldn't lose sleep at night.
I guess so much of it too depends. I mean, the ecosystem's so large now, it kind of depends on, well, are you looking to learn more about like the investment side of it or more about the technical side? Do you want to learn more about like DeFi, or do you want to learn more about Bitcoin and Ethereum and why, they've become so successful? So I guess like I would also say, maybe try to narrow down your focus or spend some time with a more narrow focus rather than just taking in the fire hose.
Yeah, that's smart, because there is so much. I mean, you could go down the Bitcoin maximalist rabbit hole. You could go down the Ethereum rabbit hole. You could go down the DeFi rabbit hole. I would say learn the basics first, just of blockchain stuff and wallets and all that.
Yeah.
And then from there, pick where you want to go and where you want to put your focus. Do you want to be an NFT, creator? There's so much. And I always say, like, there's never a dull day in crypto. There's always something crazy happening.
I got an interesting question real quick, too, that some people may find helpful. It was from a fellow female trader, which is, rare. She basically, in a nutshell, is saying that she's had a couple weeks of a rough go, and she's on a dry spell with the trading and losing money, feeling very discouraged, wondering should she keep going and keep getting that screen time, or should she take a break, reset, and pull away.
Yeah.
And I think that in stocks right now, a lot of the traders that came into the market, especially in 2020, are probably feeling this hardcore because, to be honest, the market environment has completely shifted.
Yeah.
And easy money's gone. So what I told her was, and what I would tell anybody, is when you are in that state of mind where you're losing money and you're feeling very anxious and upset about it, it's usually best to pull away for a little bit and rest your brain, because once your emotions are that tossed up, it's very difficult to come down from that. And then you end up, even though you're sitting trying to get screen time, you may end up making a silly mistake.
Yeah.
And trying to get in the market when you know you shouldn't be.
End up revenge trading. Thinking, okay, I'm down. Now I got to make that back. And then you start getting more aggressive, and it's like a downhill spiral.
Exactly.
Yep.
Yeah.
I would also say, like, what is your strategy? Like, do you have a winning strategy? Because if you're trying to day trade, you are almost guaranteed to lose money. Like, if you're in and out, in and out, in and out, and you're following some guru who's telling you can make $1 million day trading, you're probably not going to do that, right? Like, the odds are against you. Are you swing trading? Are you position trading? Are you value investing? What are you doing, and what's your edge? Do you have an edge? If not, if you can't answer that definitively and say what it is, then you don't have an edge. You are the dumb money.
It's that, and it's also what people don't want to do, which is what I teach in mental mastery, is that people don't want to learn how to properly actually plan a trade before they even get into it.
Yeah.
So, you have to learn to crawl before you can walk, or learn to walk before you can run type of situation. But most people just go straight in.
Absolutely. I mean, and I get it. Like, if I were new to the markets in 2020 and I'm looking at this going, oh, everybody's getting, what's that old headline? Everybody's getting hilariously rich except you. That was one of the ones from 2017, near the top. And then you have people going, okay, fuck it. I'm going to go all in and hopefully I get rich. Those are the people that lose money, right? So if you're watching and you're hearing all this and you're hearing all the hype and everybody bragging about their gains, that's okay, but don't feel like you have to rush in and you're going to miss the boat. FOMO is probably one of the biggest killer of capital ever. Overtrading and FOMO.
Yep. All right, what do we got?
Got a question. My Ouzo, sorry if I messed that up, says, I've learned a lot from you guys over the past 5 years. Mind giving some insights on your bad trades where either you reevaluated your position and closed, or your stop loss got hit? That's a good question. Bad trades. So, okay, I don't really call them bad trades. I have what I call yes and no trades. A yes trade is a trade that I would take after the fact, even if it lost money. If I'm like, okay, I took this trade, I followed my plan, the probabilities were there, I followed my plan, but it lost money, that's still a yes trade. I would take that trade again. A no trade, even if it won, if I made money and I'm like, whoa, I was revenge trading, or I did something stupid, or I bought at the wrong place, but I made money, if that's a no trade, I'm not going to want to do that habit or replay that trade in the future, because I know the probabilities, if I take that trade again a certain number of times, I'm going to lose money over time, right? So that's step one, is like, try to take 100% yes trades. And if I do take a no trade, what caused that? And then I evaluate. The main thing that causes me to lose money, typically in crypto at least, is closing too early. Like, I'm pretty conservative with what I get in. I don't chase shit. Like, my entries are usually good. My weak side is usually management and underestimating what crypto can do. And I don't know. That's where I've left the most money on the table. I don't know. I don't get stopped out a lot because my entries are either at breakout points or dip buys. I'm not chasing parabolic moves. I don't know. What about you guys?
That must be nice.
I have had, actually, over the past 30 days, I had a couple of graceful exits where I was like, okay, markets are up. I took a couple of breakout trades that just didn't work, and they came back and I took losses on them. But I would consider those yes trades. Yeah. So I don't look at those as bad trades. They were good setups, but the market is up a ton, and the volatility over the past month, some of them came down, and I did get, quote unquote, stopped out, not usually with automatic orders. Most of the time I'm manually exiting trades, but I consider that a stop, or I lost, but I still consider those yes trades. What about you guys?
Yeah.
Examples of no trades or bad management?
I mean, I've had all of the above. As I was a day trader for a while, so tons of stuff has hit my stops. Even swing trading, I've had things hit my stops. I had a swing trade last year. I think it was cars, and the trade ended up working. But
you jumped out too early?
I jumped out. It hit my stop, and so I got out. It was kind of when things were still questionable in the economy, and we were still in a really weird spot. And it was
it was during the summer chop, if I recall.
Yeah, it was, and it was kind of hard to really have the confidence with everything. But it stopped me out, and I stuck to my plan, and sure enough, of course, it ended up working. But I don't regret it at all, because I knew exactly what my risk was. I knew exactly where I would have gotten out, and I feel like sometimes sticking to a plan is more rewarding than anything, even if it ends up working out, because there are plenty of times where you get out and it just falls.
Yeah.
I mean, lots was one where you got out and it just kept falling. And so obviously that was the right decision. And
Yeah.
I'm sure you've got other examples too. And then there was another one that I took on. It was a retailer, and I didn't see the writing on the wall. And sometimes the fundamental side at the time, it was kind of hard to see, because in the moment the fundamentals were good on the company, and then it literally just took a turn. And then I just ended up, losing money.
Sometimes that happens. You can have all the best information and know what you're doing, and the market can still go against you.
Yeah.
It's just like poker, right? It's like you can have the best pocket hand, and then, the flop comes and it just kind of screws up what you were
Yeah,
thinking.
and you're blindsided sometimes. I mean, sometimes it's like, oh yeah, things are great, we're growing, and then a few quarters go by, things aren't going so hot.
Yeah.
Depending on the company.
What about you, Trav?
I would say the majority of my most costly mistakes, similar to you, has been leaving money on the table by selling too early.
Yeah.
Now, I will say I've also had some losses that stung because I stayed in and I stayed my welcome too long. So there's a balance there, right? Like you want to be able to sell quickly when the thesis has changed, or when something is not right fundamentally. You want to actually take a quick exit when that happens, because you don't want to be bag holding in something, especially if it has high operating or financial leverage. Last year, I went against my own rule with that with Rolls-Royce. Over the summer, I was like, I don't think that management is going to raise capital here at these low prices. The business is going to recover. They'll be able to raise capital later at higher prices. And then the rumors of their capital raise kept leaking out. And I waited and waited and waited, thinking, surely they're not going to sell stock at the low. And sure enough, they sold stock at the low and diluted shareholders. And I had to exit with a pretty significant loss. And one of my biggest losses of the past, I think, 3 or 4 years. It was only a couple percentage of couple single digit percentage of capital, but still that was big for me. And I don't like taking a loss that big. But that was a case where I stayed too long and I didn't sell quickly enough. So there's this balance, right? Now on the other side, most of my big mistakes have been selling winners too early. So I've been really good at identifying the multi-baggers, the trends that are going to be important ahead of time. Even stuff like GameStop last year, but I was out on GameStop when it was a $20 stock, not when it was a $200 stock or $400 stock. And so I have a video on my YouTube channel talking about booking back in the early 2010s when it went up 10x after I sold it. I sold it for a triple and then it went up another 10x, right? So like there's a balance there. Yeah, Wayfair is another one last year. I'm really good at identifying multi-baggers ahead of time before the crowd, but I often take my gains off the table too early. That's my biggest mistake.
Yeah.
But it's because I don't want to be in the situation where the thesis changes and I'm stuck and then I give up too much, right?
Yeah.
So you have to know, and knowing when to sell is a really tough decision, but you have to know and be able to differentiate between when the fundamentals are not right and your thesis is not right, like with car lots, and that's why I exited without a loss. Or is it a booking.com where it's a phenomenal company and they're growing and maybe they have a short-term hiccup and you're missing the forest through the trees and you shouldn't be selling just because the valuation is a little bit overvalued, right?
Yeah.
So it's tricky, but I would say really making sure you differentiate your sell decision between my thesis has changed and I need to sell, or the stock's just a little bit ahead of itself, but it's a great company still growing with lots of potential, right? You don't want to sell that.
Yeah.
Right.
I forget who it was, but there was a trading psychologist that either in a book or in a course or something said, it's helpful to think of your job as a trader and investor as two separate responsibilities. One responsibility is getting into the trade and doing the research and finding the setup, finding the entry pattern, sizing, all that. That work is like one job. Mm-hmm. And then your second job is management. What do you do once you get into a position? That's a whole separate skill stack and whole separate like flow of actions, right? Because you can close too early, you can outstay your welcome, you can move stop losses too close, you can overthink it, you can overmanage it. There's a whole lot of stuff that can go wrong on the backside of a trade. So So if you think about those as separate things and like break out the skill stack of each and then kind of identify where you're strongest and where you're weakest, where you can work on that.
Yeah.
And it's really hard to be perfect. You know,
It is.
It's impossible.
You shouldn't expect perfection as an investor
No.
or trader.
Profits over perfection, right?
Yeah.
Yeah, it's just all about trying to sift through the data and be comfortable with your decisions.
Yeah.
You know, and play out the scenarios. If you exit something because of it hitting your stop loss or whatever, like, is there something fundamentally maybe you're missing that maybe you didn't pay attention to that? And then, you know, like with cars, like maybe there was something fundamentally there that I wasn't paying close enough attention to. And
Yeah.
I should have stayed in. It's kind of a juggling. It's a juggling game.
Yeah, absolutely. And that's why, like, in my little tweet storm today, I said, instead of trying to guess where the top's going to be, I follow my, quote, no regrets trade management plan that helps me participate in future bull runs but also protecting my downside. So, like, basically I scale out into predefined profit targets, right?
Yep.
So instead of trying to say, oh, this is the top, crypto Twitter has this like ego thing where it's like, oh, who called the top last time? Who gives a shit? Who made money last time?
Yeah.
Right. And like, as things are going up, I predefine those targets and I scale out. Sometimes I sell too much too early. Sometimes it's kind of in that sweet spot. Sometimes it's too late. But as long as you make money, who cares?
Yeah.
You know, you can't be perfect.
Yeah.
Chris, when will you open up your next crypto course? So I think you're talking about the 8-week boot camp, Desmond. We're actually going to do one of those over the spring or early summer. But in the meantime, for any of you guys that want to join our community, we do have a 50% off of your first membership tuition. So for anybody that's not in the community, I know a lot of you guys are, but for anybody that isn't, you can go to wetalkmoney.com/community. And then the promo code is spring21. So spring21. And then that'll get you 50% off of your first month or quarter if you want to join us. And you can see on that page what all we do. But it's basically, you can kind of peek into what we're doing. And we have weekly education classes and courses and all that stuff included in the community. So yeah, that's that.
Christian was asking me a couple times in chat, so I figured I'd address him. He was asking about the software stock that I was mentioning earlier, but I actually just alerted it today in our community. I just posted today in our community that it was a position I'm still accumulating. So that's one of the benefits of being part of the community, is you get to hear about what we're investing in, you know, first. So I don't want to talk about it today here on the podcast. I may talk about it in a future podcast down the line, but it is it's a North American based software company that is focused on. I'm gonna give it away if I tell people what.
Just
it's
give it away,
on.
damn it.
They're focused on incident response and digital operations management. I'll say that.
Okay.
And it's a really interesting company with a good CEO. It hasn't been public that long. Growth has been accelerating in the last quarter or two, and very high gross margins. Classic SaaS software type of metrics, and trading at the lower end of the software universe when you look at things like EV to sales or EV to gross profit, especially given the accelerating growth rate. So
Nice.
I also would say, though, like Upwork kind of fits that mold as well. That's a position I've held since it was a single digit stock. And what's interesting there is that when you look at the revenue growth and the valuation versus other software or marketplace peers, it looks actually like a relative bargain, because they've had the third straight quarter of accelerating revenue growth, growing at almost 40% year over year. I wouldn't call it like a cheap value stock, but I would say, like, you look at EV to sales or EV to gross profit, and it's at the lower end of the range for the universe of software stocks out there. So
Sweet.
still a lot of long-term opportunity there too. So, and yet the stock's been selling off. So, you know, it's one where I'm kind of keeping an eye on, because it might be one where I add back to my position, add some size back if it
For
keeps
a round
selling
trip?
off. Yeah, because I've been selling, I was selling some as it was up in the 30s and 40s, and taking some profits, like you said, scaling out. But now that it's coming back down, I might look to size back up, especially because the fundamentals are catching up to the valuation.
Yep. Awesome. Nick was asking, how do you guys predefine profit targets? Do you just pick a number in your mind where you want to sell? I have
crystal ball?
Yeah, I have a crystal ball, and I look at the cloud formations. No, it's a combination of a few things. Number one, I'm a big fan of Fibonacci extensions. I just love Fibonacci retracements and extensions and fractals. Also, emotional round numbers and prior resistance areas and measured moves of accumulation ranges. Wherever I can find confluence of a few of those that line up at the same area, you'll notice that's where a lot of price action typically trades around. So,
You know where I found a lot of confluence for the S&P 500? 4,000 level. We'll see.
okay.
We'll see if it hits.
Let's see if it hits. Yeah, Bitcoin's breaking down, testing that 100-period moving average. We've actually got a lot of action today.
By the way, just real quick,
Yeah.
Tesla came out and said that they've suspended vehicle purchases using Bitcoin.
Uh-oh.
What?
They're concerned about rapidly increasing use of fossil fuels for Bitcoin mining and transactions.
Oh my gosh.
Especially
Oh, they're trying to
because
stay
of-
in the ESG.
Wow.
graces.
That's why everybody's calling Elon a scammer in chat.
What a shit show.
He did say Tesla will not be selling any Bitcoin, and we intend to use it for transactions as soon as mining transitions to more sustainable energy.
Yeah.
We're also looking at other cryptocurrency that use less energy per transaction.
Wow.
Wait, what? Wait,
Okay.
what? Really?
So this very well could be an ESG issue.
He
Yeah.
maybe was going to get kicked out of the ESG funds or something.
ESG is environment, social and governance, or sometimes it's environment, sustainability, and governance. But yeah, it's basically a category of investing or of ETFs that invest in socially and environmentally conscious companies. And Tesla is seen as one of those ESG stocks, and it's included in ESG. And
That's funny.
investing.
And this is why I always say, like, we don't need celebrity worship. Like everybody that was like, oh, Elon's a god, the people that are going to put him up on a pedestal for pumping Dogecoin are the first ones to turn on him when he does something like this. Like, at the end of the day, who gives a shit what he does?
Yeah.
I know he's the richest guy on the planet, but we don't need him.
Yeah, he's not instrumental to the future of cryptocurrency
Not
by
at
any
all.
means.
Yeah.
I mean, how many people are buying Teslas with Bitcoin is my question.
Very few.
Yeah, that's what I would think.
Very few.
But still.
Yeah. Crazy.
Yeah, I think, yeah. Tesla's very Tesla has they are a very press focused company. A lot of what they do is very much focused on controlling the narrative around the company and around Elon's image. So they will do things that are kind of strange to try to maintain a certain image among their, consumers. And so
Yeah.
keep that in mind.
That's what Crypto Falafel just said. Elon controls the narrative. He said that, I think, before you even said it.
Yeah. Yeah, it's a
So-
great point.
Well, I saw a couple of questions about options asking, do you guys ever use options, or do we use futures or options either in crypto or stocks? Trav, you want to take that one?
Sure. Yeah, I utilize them occasionally in stocks for different use cases. Sometimes for things like hedging. Sometimes just for pure speculation, whether that's outright long options or long spreads, both bullish and bearish. I just use them at various times when I think they offer, when the situation and conditions are right and they offer like a really good risk reward.
Yeah.
Typically though, the options positions are sized very small. I definitely I'm very careful with the position sizing of options, because even though when you calculate your potential gain on some of these things can be very high, they also typically have 100% downside. And so you have to size them with that in mind.
Yeah. Yeah, I don't really play Bitcoin futures. I mostly play the spot markets, and I don't use options for hedging or anything like that in crypto. I guess I could, but I really like the spot markets.
Yeah.
I don't need leverage. I don't want to use leverage.
Yeah.
Especially on altcoins and, anything that could offer, that we just see so many flash crashes in crypto. And like, I've just seen so many people get liquidated on shitty, unregulated crypto exchanges that I'm like, all right, I don't want that layer of risk. I don't need the leverage. Let me just use spot.
Great point. Yeah, and you have to be careful with options too, because you have to be so right on the timing. We should also differentiate futures versus options, right? Futures are a totally different set of risk reward and characteristics than options typically.
Yeah.
So that's one thing I'll say as well, is futures are very different. Futures will have, potentially embedded leverage and lots of different exchange requirements. You have to roll them depending on, when your futures expire. Options also have expirations, but they can be more standardized. They can actually have even more embedded leverage. And so two different products used for different purposes, but both are often used just to gain more leverage.
Yeah.
And so that's why I was also saying position sizing is really key there, because you have to be aware that leverage can work against you. And options are just tough, like I said, because you have to nail the timing. Oftentimes you have to not only nail how a stock or underlying is going to move, but you have to also nail it in a certain time frame and be right about the size of the move to make money. So it's tricky.
I think it helps with options to have really good technical analysis skills.
That makes sense.
I found that's helped me the little I've
For
dabbled
timing
in
to like know breakouts or breakdowns.
Yeah,
or,
know when a key level's breaking and kind of time it to where it's your expiration makes a little more sense. And
Yeah.
I just find the technicals with options. I don't even know how people play options without technical analysis.
Yeah.
It's kind of blows my mind unless you're just really in tune with markets. What blows my mind as well is all the people that traded options on Robinhood with really having no idea what they're doing, because they're actually very complex instruments, and newbies.
There was that
I don't know
suicide
how-
last year.
I know, and I don't know how they have
Robinhood
this
kid, right?
confidence to just get in there and just start doing this stuff. I mean, I'm so cautious and careful with options, and granted, I'm still learning every day about it, but it just the confidence they have to just hit the buy sells and just learn about them, because
YOLO.
options are complex.
Yeah.
Yeah.
Yeah. Well, look, guys, we've been going for almost an hour and a half, so we can start to wrap it up. Let's talk about what we're looking forward to over the next week, what we're looking for in the markets. It's funny, like right now, crypto Twitter is probably losing their face over the Elon Tesla announcement. We've also got the rug pull on Vitalik's rug pull, donating the money to the India COVID fund, and
Yeah, it looks like a little bit of pressure in the crypto markets right now. Plus, you've got the backdrop of the equity markets being weak and selling off. So
Yeah.
that could be some short term.
Yeah, I know in Bitcoin, there's kind of a high probability area if the 100-period moving average snaps through 50K. I'm looking at basically 42K is the next support zone, which could possibly line up with the 200-period moving average. Prior resistance turned support from January, and also the 100% extension from the all-time high. So I'm keeping a close eye around 50K. There's a reason why today, I sold pretty big positions in Bitcoin and Ethereum and Link and a couple other large ones. But there's also a reason why I haven't sold on some other positions like Monero. So I bought Monero down here in like the $100, $150 range, and it's testing the all-time high as of this week and last week. So we'll see what happens here, but I'm really anticipating to see if we can get a breakout above 500 on Monero. So I'm still bullish on crypto, even though I've been taking profit on some high flyers. And that's really it. I'm just managing positions, looking for dips, looking for breakouts. What about you guys?
Yeah, definitely hunting dips in our world right now in stocks, because even though the indexes, I think the NASDAQ is only down about 10% over the past month or two, which actually is a pretty decent correction. S&P only now just starting to correct, down a couple percentage points, but there's a lot of stocks in the market that are down 30, 40, 50% now. So we're starting to sift through those, starting to figure out what business models are the best that we want to, align ourselves with going forward, especially with this inflationary regime. So we're just out there hunting dips, doing more work. Earnings season, it's very busy. It's a busy couple of weeks right now.
Yeah.
Because you're taking in all this new information and data at the same time the market's selling off. So you're trying to do work.
Overwhelming.
Yeah. You're doing work
Can
on
be.
your existing stuff, and you're also trying to look at all the new stuff that you might want to add to the portfolio.
As things sell off and you're like, you don't want to miss it. So
Yep.
it's a little bit like,
I mean, I love it.
That's what we live for.
I
you
feed
know,
off of it.
It's funny when things are dry and slow, we find ourselves wishing for more action and more complexity and more, you know, more craziness. When things are crazy, it's like sometimes you just wish things would slow down and you could like take a breather. But no matter where you are in the markets, one thing I always like to say, guys, is there's always another trade. Like, no matter if you're bored or overwhelmed, there's always more opportunity in the future. As long as you don't do something stupid and trade on leverage and get yourself taken out of the game. Learn
right.
first to survive, then thrive.
Well said.
Well said, sir.
All right. Well, I guess on that rant, we can wrap it up. Guys, thank you so much for being here today. Thanks to Y Charts for being a sponsor of the show. And if you guys want to join us in our wealth building community, you can go to wetalkmoney.com/community and use Spring21 to get 50% off of your first membership tuition. If you want to come in, see what we do on a day-to-day basis, hang out with us in the community. We have a lot of crypto OGs, a lot of stock OGs. And I recently found out that our average membership, how do you say this? Retention, our average member stays with us for well over 2 years on average. That's including the people that just come in one time and then quit within like a month.
Oh, much love and appreciation.
We have a ton of
from
people that have been
you.
with us for over 5 years. So.
Yeah, we've built up quite a community, and you know, I think there's a lot of value add, not only from us, but also amongst the members as well, who have, you know, contributed a lot. So
Oh yeah.
Yeah.
They help each other out a lot.
Yep. We have some really awesome people in there. So again, guys, thanks for being here. If you're watching it live or listening to the podcast, you can also go to wetalkmoney.com to submit a question for the show. And we'll see you next time. Take care, guys.
see y'all.